Hi everyone. Uh, Good day. Uh, I'm Shrey Loonker. I manage the Value PMS strategy at Motilal Oswal AMC. I'm just to give you an idea of what has been happening over the last 3 months. Uh, Obviously, the markets and India as a country and citizens of India got faced with this COVID wave 2 challenge, which was uh, unpredictable, and it came with with its suddenness and the shock that it gave us, which was very similar to wave one. The only good part at this time, what it was that wave one really lasted for about 4 5 months, but wave two was a very sharp rise in cases and a sharp fall in cases. So that made sure that the duration through which the COVID lasted was much smaller than wave one, and which is the only redeeming factor. However, having said that, the extent of damage that was done in this limited time frame was a lot more on a time weighted basis. Given that this was not just an urban problem, it went into rural India as well this time around, and that's what made things a little complicated. But I'm just glad that as I speak to you now, most part of the country, COVID seems to be behind us, and in a way, just to bring a positive angle on the behavioral side also, is what COVID wave one, wave two has done is it's taken out the vaccine hesitancy which many of us would have had before, and it just made us believe that vaccine is the only way forward for most of us to protect ourselves from wave three, if there has to be one. Moving on, broadly from a portfolio standpoint, obviously wave two was unpredictable. And yes, about 75% of a portfolio's earnings would be broadly resilient through this process because they were either in the right side of the demand cycle or right side of the inventory cycle. However, there is that 20-25% of the portfolio which will be impacted, which will be largely the allocation in the auto sector and largely the allocation in the discretionary consumption sector, which will get affected. But we again, as I told you, the redeeming factor, the most redeeming factor of wave two was the duration of this wave two was much smaller, and that's what made it very convenient for us. Uh, Second of all, broadly from a portfolio stack-up perspective, just to give you a quick vitals, the portfolio is delivering about an ROE of 19%. Even in the year FY21, which was supposedly a watershed year thanks to COVID, the portfolio earnings has done remarkably well, much better than our expectations. When we started the year, we thought the portfolio earnings would decline by 5 to 7%, but we ended the year with almost 25% plus earnings growth even in current year, which is extremely heartening, and we feel very good about that. However, so the portfolio is a very high ROE portfolio today. Just to lay it out, the portfolio is about 28 times price to earning on FY21 basis. It's giving you an ROE upwards of 18 to 19%, and we believe this portfolio will give you earnings growth upwards of 20% to 25% over the next 2 years as well. And thus, we remain confident that there will be an absolute compounding which will happen given that the portfolio is pegged at 1.5 PEG. It seems broadly very reasonable compared to the markets today, and we feel that the portfolio shall continue to deliver the promise of absolute return. Broadly talking about a few stock calls that we would have made, we added a stock called Home First, which is a affordable housing finance play. It was a new IPO, and the IPO wasn't successful. And typically, we find these kind of events extremely thrilling, given that the expectations are low and margin of safety becomes very high, and that gives us an opportunity to add this name to the portfolio. We believe this business can continue to compound at 30%, and it remains very reasonably priced for the kind of growth it can offer over the next 3 to 4 years. And it's extremely competent management along with that. The second thing is obviously we've added more to L&T. We believe that the government is the richest ever that we've seen in the last 12 to 24 months. There is a lot of unspent money, and there is a lot of desire to stimulate the economy post-COVID wave two. And the best way to do it is dial up the execution of the infrastructure projects, and which we believe can end up benefiting L&T, and it continues to remain extremely reasonably priced again. So broadly, these are the two changes, broader changes, bigger changes that we've done in this so far. Broadly, from a thematic basis, you may want to think about it that we are actually reducing allocations to mid cap and small cap, booking profits, because there are stocks which we multiplied money 4 5 times. We're taking money on those names, and we are allocating more towards larger cap names. With that, I hope you all will continue to remain safe and keep your guard high and get yourself vaccinated soon. Thank you very much.